Welcome to the trading strategy explanation video. Let's take a look at the charts we have here. This is a weekly chart of the USDJPY. Notice how the price of the asset steadily rises over time, drops over time, rises over time, drops over time, and rises over time. The trend following strategy capitalizes on trends like this. It's based on the principle that markets tend to continue their existing trends rather than reversing abruptly. To identify and trade these trends effectively, we use various technical indicators. And on the chart here, you can see we are currently using 3 technical indicators. Firstly, we are using a faster moving average, and then we're using a slow moving average, and we're also using the force index average. Now with these 3 indicators, we can combine the calculations and then use this to enter a buy position or a sell position or a neutral position based upon the conditions. Now let's look at a buy condition. For a buy condition, the fast moving average has to be above the slow moving average, and the force index average has to be above 0. And that means that the price is trending upwards or in the upwards direction. This means that so long as these conditions are correct, we are going to continue holding a buy position. Now let's look at a sell position, or a sell condition rather. For the sell condition, the fast moving average has to be below the slow moving average, and the force index has to be below 0. And once this set of conditions are met, we are automatically going into a sell position, and you're going to hold that sell position until one or all of these conditions have been invalidated. Using these conditions, we are aiming to capture substantial price movements and ride the trend for as long as it persists. The idea is to let our profits run.